All right, guys. So today we're going to be going over pretty much indicators and how I use them. And then we're going to be going over getting into our intro to like identifying certain trends so you don't get chopped up. So I want to go over indicators first. That's pretty much, after we learned candlesticks, we learned support and resistance. We learned a little bit more about other things. But now it's time to like actually start building our strategy and start building our trading, right? Building up our trading plan and whatever. So the indicators that I use are the 9 EMA and the 21 EMA. So if you don't know what that is, I'm going to put it in a chat right here so you can see the 9 EMA and the 21 EMA. 9 and 21 EMA. So when it comes to indicators, I use these indicators on every time frame. So there's not like a certain time frame that I'm using these indicators on. These are the main ones. I'm using this on every single time frame that I trade on. So whether that be the 5-minute, 15-minute, hourly, 4-hour, daily, whatever time frame that it is, I'm always going to use these indicators, right? So if you see on my screen right here, the blue line is my 9 EMA and the orange line is my 21. Next indicator that we have is, it's not really an indicator, but we have volume. Now, I'm not a big fan of, volume all the way, but the way I use volume, I don't like stress like, oh, it has to have high volume on a breakout or whatever, mainly because I'm not a breakout trader. And sometimes volume does have a lot of fake outs. So for me, sometimes having that volume be a lot of noise. But one way that I do use volume is if I see a stock pushing up, right, and the volume is actually decreasing, then that tells me that that's like a fake push. An example of that was, I can't even show Amazon because Amazon stock split. But example was Amazon was pretty much doing this, right? Amazon was pretty much pushing up. And then the volume was pretty much going down, right? Every time each volume bar that we got, the volume just kept decreasing. So as we got to that resistance level to break, to think that we were going to go higher, it immediately rejected pretty hard, right? So that's some ways that I use volume. I'm not, like I said, I wouldn't stress it too much. Some traders, they stress it a lot, but me personally, if you understand, candlesticks, you understand chart patterns, you just understand market structure and just technical analysis in general, you shouldn't have to stress the volume too much. But that's one way that I use volume. That's pretty much actually the only way that I use volume, just to see, like, if we're having a nice push, I want to see volume increase, every time that we're pushing, right? So like this move right here, y'all see this move right here. Everybody see this move, right? Hold on. All right, do everybody see this move right here on Amazon? SPY. Yes, no, maybe. Making sure I can still see my screen. Y'all got quiet on me. All right, cool. All right, one person can see it. That's good enough for me. So as you can see, as we made this push up, right, the volume basically kept increasing. It wasn't perfect, but overall, these volume bars was pretty much pushing, right? So that would give you more confidence that it's going to go to your target, if that makes sense. So that's kind of ways to see it. If you want that extra confirmation, with trading, whenever it comes to trading, you want the most confirmation as possible, right? So that's another way, as we push in to see if we can hold, each time, we were pushed up, the volume kept increasing. So that's pretty good, right? So that's kind of ways that I do it. So if I seen this move, right, and I seen the volume actually decreasing, then I'm more likely to, get ready to start taking profits or get ready to get up out of that trade, right? Because the volume is increasing. But like I said, you don't have to stress this too much, in my opinion. But like I said, you can do whatever you want to do. But it was a cool tool to use because, as you can see, we were steady trying to push, and then the volume was steady lowering. And then, as you can see, what do? We did have that pullback. So, you can take it how you want to take it. That's kind of a good indication, but understand that the market that we're in right now, the volume across all boards are pretty low. So if we're being honest, the volume not going to be your best friend because like everything is pretty low. Like if you look at, I think Apple, I think they have like, Apple normally has like 100, maybe like 190 million average volume. And then they only, like lately, they only been having like, 10 million, 21 million, something like that. So overall, we know that the market is pretty much, low volume. So understandable, the kind of market we in. So that's how I use that. Next, this is actually my day trading indicator. How many of you guys are familiar with the MACD indicator? If you're familiar with it, this is called the stochastic slow, not the stochastics RSI, not the stochastics full, not the stochastics. That's a hard word to say. Not none of that. This is simply stochastic slow, right? That's the right one. Some of you guys be like, hey, Jay, when I taught you guys this back in last year, some people that have been with me from last year, everybody kept having the wrong stochastics up. It's stochastic slow, guys. That's the one that you want. That's the correct one. It's this right here. So it's pretty much similar to the MACD. It is a little faster, and that's why I call it for day trading. I don't use this as much. I use it, but I don't like. It's like it's on my charts, but it ain't nothing crazy. Like if it's just there, and if certain setups present, then it's that I use it, right? It gives me that extra confirmation. So let me show you one of the ways that we use this indicator right here. So pretty much you're looking for golden crosses and death crosses. That's pretty much what it is. So as you can see right here, right now we wanted to break above this 409.49 level, 409 level on SPY. So as we broke above, we pretty much consolidated right here, waiting for that next move up, right? We broke below a little bit, but nothing crazy. We still held that 21 EMA. But as you can see, we pretty much just consolidated right here, right? Getting ready for a move. So we pretty much consolidated right here, getting ready for a move. And then if you were thinking like, okay, now it's time to, take calls on the break, as you can see, you had this stochastics indicator cross up that's giving us a buy signal and pretty much going from there. So you pretty much treating it for death crosses, golden crosses. Like I said, you want to pay attention to price, but, having these indicators and when they work properly, they can definitely give you the extra confirmation that you need to take a trade. Any questions on this so far? Ask now. Let me know now. Oh, y'all want me to spell it? Oh, I'm gonna just go ahead and type it in the chat. Stochastics. What is it? Stochastic slow. Okay. And don't change nothing on it. Just leave it as it is. No, this is not the MACD. It's similar to the MACD, but it's a lot faster than the MACD. But I'm about to show y'all some more examples of it, just so you can see. Yes, it's this right here at the bottom. This right here. My bad, y'all. This is the volume that I was talking about, and then this right here is my stochastics. So treating it like the MACD. Let me show you another example real quick. Okay, so right here we had pretty much the stock sold off from resistance. Y'all can see that right here. We actually had two forms of confirmation here, but as you can see, we pretty much we was at this resistance level, and then we started to sell off. And what do we have? We had a death cross right here. I don't know. Can y'all see this right here? This orange right here? Yeah, it's a momentum indicator. Yes. Y'all see this right here? Where I just circled this. Let me make it a different color, so maybe y'all can actually see the cross. Oh, yeah, I can see it. I'm gonna just, anyways, you see the cross. So as you can see, we sold off from resistance. We also had a death cross here on my 21 EMA and my 9-1. And that just gave us a sell signal to take SPY down, right? So there's ways you can use it. That's like the more profitable way. I will tell you guys, because I know, yes, it works on all time frames, but the furthest I go is the 15-minute, in my opinion, because I use it as a day trading indicator. And then any other time frame above that, if I wanted to do something like that, I would just use the MACD instead. So this is like for the 1 minute, 3 minute, 5 minute, 15 minute, 10 minute, those time frames. I went, I mean, you can go on the hourly. I've used it on the hourly before, but overall, it's kind of a little faster. So I trust the MACD on those bigger time frames. And we'll get into the MACD in a minute, but I'm trying to show you, like, right now, swing trading is not, it's barely a thing right now. So, it's kind of pointless to go over that right now. I'm going to go over it in a minute, though. So pretty much same thing here. All it is, so basically, let me explain what this indicator is anyway. So the stochastic indicator is pretty much telling you it's like a momentum shift, right? It's a momentum indicator. So it's basically telling you where the momentum is going, right? So right here, we selling off from resistance, right? We had a nice push up, right? And then now this indicator was basically telling us that the momentum is now shifting. And what happened? The momentum shift, and then we came down. So it's pretty much one of those, like I said, it's really good to have like the extra confirmation. Just like if you're scared to take a trade, there you go. And let me show you another example. This is actually a trade that I took. I'm not gonna lie to you guys. Did I lose on this trade? No, I won. I won on this trade. Never mind. This was a trade. This is probably my only win recently. But like I said, so overall, we got our chart pattern recognition, guys, right here. We got our ascending triangle. As you can see, we all know that ascending triangles are patterns that can go either way, right? They can break up or they can break down. So as you can see, this one decided to break down. Can anybody tell me what gave me an indication that we were breaking down on this? What other confirmations did I have to tell me that we were breaking down? Yeah, we had a death crosses and we had death cross on it. So as you can see, this is what I mean by speed. As you can see on the stochastic indicator, we had already, crossed down. So it kind of picked up that we were going to break down a little faster than the actual pattern itself. You get what I'm saying? So right here, we were getting a death cross on the stochastic indicator right here, this orange part, about right here, right? We were getting this sell signal here, and now we just have to wait for the pattern to actually break down. It broke down here, and then we actually got a death cross. So when this momentum shift, you could have already been thinking, maybe most likely the way it's looking, it might break down. Now, do it however you want to do it. You could have took some anticipation. You would have definitely went red for a little minute. But, overall, it was giving you that early indication that we are coming down, right? So when you're using it, understand, guys, it gave you an early indication. You already thinking puts. Then when we broke out, got that death cross. Now you got more confirmation. Take the trade. Then as you can see, we bear flagged here. Hold the trade. There we go. We cannot break back above the 9 EMA. Use all these, like there's so many ways. I'm about to keep breaking down how to use the indicators. But overall, like when you use the indicators with price, but you let price lead first, then you will have a lot better setups, right? Some of you guys, the problem is, and especially new traders, is you let the indicators lead first. Remember what I said? I said when you let price lead first. Price is the number one thing, right? When I mean by price, if anybody asked me, because I had this last time, somebody was like, what is price? Price is your candlesticks, right? That is all of this, these candlesticks, that's your price action, right? This is your price action. That come first. Delete, you can delete any indicator, you can do all of that. Your price comes first, guys. Price comes first. Then your levels, then your chart patterns, then your indicators, right? So your indicators are just there for extra confirmation. Now, I don't want you guys going and flooding your charts with indicators or whatever. Only use indicators when you fully understand price first. That's the difference. There's no indicator that's going to basically make you rich. That doesn't exist, right? You want to learn price before you learn anything else, right? So overall, let's delete all the indicators first. We can take all of these off. It'll still be the same thing. So I don't really like teaching indicators too much, because people start getting used to them. Without the indicators, it's the same thing. Price is rejecting the resistance level, creating a ascending triangle. You don't even got to really know chart patterns. I mean, yeah, you want to know, but I'm just saying, like over here, we just noticed a consolidation at resistance, right? We are wicking at resistance. Now we're just waiting for a break of this consolidation. We take the break, we ride it down. What do we have? Another move up into the resistance, right? We just created a bear flag, broke down again, and then came back down, right? So without indicators, you didn't even need this. You didn't even need indicators, guys. You didn't need it. But if you had indicators, it would have definitely made this trade, it might have helped you hold longer, or just gave you that edge, right? In the market, when we're trading as retail traders, we just want to edge, guys. We just want to edge. We don't want to beat the market makers. We don't want to do none of that. We just looking for our edge. We're getting our money and we leave it, right? Can you explain a little more? Yeah, I got you. So let's put the indicators back on, guys. Let's put the indicators back on, apply. Now, when you add the indicators, then this gave you that extra confirmation. We had a death cross. Boom. All right, we got a death cross. We breaking this consolidation to the downside. I'm gonna take puts. Here we go. Here we go. Here we go. All right. You know, if I want to take profits here or whenever, I can take profits. Boom. We creating a bear flag. Oh man, is this a bear flag or is this a reversal? Well, if to answer those questions, obviously draw the bear flag. And if you see it, you see it at resistance. Do it make sense for a bear flag to be here? Then what do we have? What is the bear flag under? What is price under? The non-EMA, right? And what do being under the non-EMA means? Bearish, right? So if you're thinking of reversal, well, you should be thinking reversal until we break back above the non-EMA. We never did. A bear flag made sense right there. Take the trade, keep taking it down, right? So that's little ways to like use indicators, right? I'm not saying always use them, but to give you the extra confirmation, it helps, right? It helped me all the time. Let's look at something else. Oh, somebody asked me real quick, they direct messaged me. They said, can you explain a little more when you say price comes first? What I mean by that is if you were to delete everything on your charts, everything, and just leave naked charts, right? Take these off. I don't think I delete them. I could just do it this way. So this is how your chart's gonna look, right? If you were to delete everything off your charts and you just keep the candlesticks, right? You keep your levels. You have to have levels in trading. Like you need those. Like you gotta make support and resistance levels. You gotta have that. But overall, if we're talking about just price, this is how your chart's gonna look, right? With no indicators, right? Just levels and clear. This is that. Now you're gonna have volume on there, you know, you can't really get rid of that, but I mean, it's there. But like volume, you know, it's like I said, we're talking about just price action, right? We're talking about literally just charts. So if you have just charts like this, all of this comes first. Forget all that indicator stuff, forget all the other, this comes first, guys. So when you look at it, like I just said, we have a resistance level, right? We're rejecting that resistance level. We are consolidating at that level. This is what happens. And this is where we're going to start getting out to identify, you know, the trend or whatever. You can't trade this. You can't trade this, guys. Too many of us, including me, I'm not sitting here to bash nobody. I've been getting caught in this as well. But, and it's like, you know what? Me personally, actually, I'm gonna be honest. Let me not even downplay like that. I haven't been getting catching this. I've been getting caught on these down swings that the market want to do something totally different. Like, actually, I did do a small swing this morning, and on QQQ, I swear it's some with swings. I don't know what it is, but me and swings do not get along. Me, anything that requires long-term stuff, we don't get along right now. So, but anyways, this is called chop, right? Most traders trade in this. The reason why is you're so impatient that you want to try to get in early, but you want to wait for them. Like you don't even, this is, I'm gonna tell you, this is like what happens. This is why people don't, you know, they blow their accounts or they can't grow their accounts, right? They get caught in this. They blow all their buying power in this, waiting for this. They're waiting for the move to happen, but they're getting all their buying power blown out in here. So then when the move happened, you already ran out of buying power. So now you can't even catch the move that you was waiting on because you were so stubborn and you wanted to get caught in this, right? Instead of just waiting for the move to happen. Let the consolidation happen. So when we're talking about price, watch this first. Indicators come last. This is what you're paying attention to. Got a consolidation. You thinking to myself, like, okay, we're consolidating, right? That means buyers and sellers are basically fighting between the price level. So now, eventually, not right now, but eventually, one side will win, right? One side will win. So what happened? Buyers and sellers were agreeing on price right here, pretty much fighting. And then eventually we had an imbalance, broke below, and there you go, right? The sellers won over that consolidation. So that's the move that you're waiting on. So let's go to the bigger picture on SPY. Let's go. If the market's been hard for you this week, let's go to SPY. Let's go to SPY bigger time frame and see what's been going on. Right? Let's go to SPY bigger time frame and let's see what's been going on. All right. So look, check this out. Here we go, right here. What is that? What is that, guys? What is this? Consolidation, right? We're consolidating. Yeah, you can get some scalps in between this. You can get some scalps in between this. But overall, I mean, how do you know? How do you know which way this is going? We don't know. This is consolidating, right? We don't know what this is. We don't know which way it's going to break. We don't know. We just gotta wait. It's just sitting there waiting for the bigger move. So what am I doing? I'm sitting on the sidelines. I'm waiting for the bigger move, right? I'm just waiting on it. But a big move is coming. Whenever you see consolidation, guys, understand a move is coming. You just have to wait for it to come, right? You just gotta wait for it to come. These moves that we're seeing on these lower time frames, this is nothing. This is literally nothing compared to what's about to happen. Do we know when it's gonna happen? No, we don't know. But all I can say is when we get these consolidations like this, the big move is coming, but you gotta hang in there long enough to catch it. Now, this one don't look as bad right here on the 4 hour, but like when we go to these smaller time frames, it's that bad, right? I mean, look at this. It's not the easiest to trade in, right? Not the easiest. So, for example, we had a push up, right, and right into resistance. You took puts, or you thinking that it's about to go down here, and then you had this random reversal in the middle here. Then you take calls again because you see we just randomly reversing. As you can see, you thinking we going right back to their resistance, and what do? We just sell off in midair. You take puts again, try to go back down to that bottom. The bottom never comes. You try it again, and it's just pretty much that all day long with you, right? All day long, right? Then finally, we get this little supposedly double bottom. Or people thought like we were selling off pretty hard right here in their close. People took puts, woke up the next morning, it sent it, right? So it's been hard. Then let's say, all right, you take puts. Here we go. We take puts again. You think it's going to that bottom again that it touched it multiple times already. Look what happened. It don't do it. It just reverse on you. There it go again. Same thing. And it just keeps repeating, right? So that's what's been happening, right? So what we're doing is we want to wait for this to die out, right? How you know that it's not a trend no more. It's not creating higher highs and higher lows. It's just chopping, right? Now we're about to start getting into the trend. Is it best to trade in the daily? It depends on what type of time frame that you want to, what type of trader you are. And we're going to get into that. That's definitely something that we're getting into. I'm going to be helping you guys figure out what type of trader you want to be, because quick transparency, you can't be all of them, right? You got to pick what style of trading you want to be, and you want to give that style all that you got, right? Me personally, I know that I'm not a scalper. I don't like scalping no more. I used to be, but I know what works for me, what makes me emotionally you got to understand trading is an emotional game, right? So you have to find the style that fits your emotions the best, right? Scalping don't really fit my emotions the right way. I don't like, being, with scalping, you wrong. Either you're going to be wrong or you're going to be wrong pretty quick, right? You're going to be right or you're going to be wrong pretty quick, right? Emotionally, that isn't for me. That's not a strategy that's not a style that I'm not a big fan of all that fast pace, in and out, quick 10%. I'm not that. That's not me. But for some people, that might be exactly what they want. They want that quick stuff. Me, I really like, I like getting my money the same day, but I like it in a longer time. So what happens? People ask me all the time, well, Jay, since you like longer day trades, and right now the market not giving you that, what should you do? Nothing. Your setups haven't presented. You shouldn't do nothing. Go do something else with your life. Find a hobby. Go do something until the market presents those opportunities. Once you start trying to do other things, that's when you start blowing accounts. And I'm a victim of that. I'm definitely a victim of that. When I try doing other stuff, I start losing money pretty crazy. So keep that in mind. If you're a swing trader, I know it's stuck right now, but if that's something that you like buying stuff and waking up to the gains in the morning or whatever, right now it ain't your time right now. So chill out, go find something else to do. Trading is always, the market is going to be here. I know that's hard for some of you guys to hear, but you have to really be real with yourself. It's your capital. Understand what type of trader you want to be. But back to the question, somebody said, so is it best to trade in the daily? So basically what I'm just saying is, if you want to trade on a daily time frame, then you're a swing trader, right? You are a swing trader if you want to trade on the daily time frame. So for you as a swing trader, you should not be on no 5-minute time frame. You should not be on the 5-minute time frame, right? There's no reason why a swing trader should be on the 5-minute time frame at all. At all. Like I guess if you want to watch it, if you want to, but there's no reason. Like I literally be having people that be in Asha plays, in Blueprint, and y'all know she by like a month out, and y'all on the 5 minute talking about Asha, it's a bear flag. But she could care less what's on the 5 minute time frame. She's swing trading, right? So you have to understand what type of trader you want to be. If you want to be a day trader, you know, you probably want to be on a bigger time frames, kind of like the 10-minute, 15-minute, hourly. Those are pretty much your time frame. Not really the 1 minute because you're not a scalper. Not too much of the 5 minute because you're not a scalper. Those time frames are for scalpers. So you got to just kind of understand what you like, what emotionally fits you. So all right. So now, any questions about indicators before we move on? Somebody asked. So no, those are pretty much the only indicators that I use. I don't really use the 200 EMA no more. I do use VWAP for scalping, but like I won't actually show you guys scalping. I mean, I won't show you guys VWAP just yet until we get over my scalping strategy. Because I do have a scalping. I can scalp. Like, let's be real. I can scalp. I just don't like it. So, you know, I don't like the risk to reward on scalping. But yes, I do use VWAP as well. Not too much, but if I am scalping, I will. So I show that on my scalping strategy. But overall, this is pretty much my setup, right? This is pretty much what I'm using. You guys will learn time and sales. I'm just waiting for a good, tape session to present, but you guys will know time and sales. It looks like this, time and sales in level 2. So it pretty much looks something like this. You have your level 2 down here, and you have your time and sales. Those are other things that you can use in day trading. Being honest with you guys, you don't need it to be a profitable trader. I know people be like, oh, I feel like I'm missing something. No, you're not missing nothing, right? I'm just being honest with you guys. When I grew my account from a small account to 6 figures, I never used tape. So if that, just to put it that way, I never used it. Now it has helped me a little bit. But overall, like I don't want you guys to think that you're missing something. I did not use tape to grow my account, right? So I'm just showing you guys what it took to grow my account. Then we get enhancements, at a later class. So now we're about to get over identifying a trend. Now I went over with you guys earlier, just briefly, but nothing crazy. But let's get over it again. So let's go to it. Let me stop my share real quick. Yeah, I better not draw on my screen, man. Actually, okay, there we go. I set it to where only, hold on. I set it to where only I can touch it because y'all be touching my stuff. Sharing your screen will close the whiteboard for everyone. Do you want to continue? Can y'all see my whiteboard? Can y'all see this? Oh, okay. Okay. All right. Zoom adding new stuff. Okay. So some of you guys already know this, but we're going to go over it again. So whenever you identifying a uptrend, right? What you want to have is conjunctions of what? Let's see if anybody knows. What are we having in an uptrend? Well, yeah, kind of. Yeah, that okay. So yeah, we got a conjunction of higher highs, higher lows, lows, and highs, right? So when you're looking at an uptrend, so put this in your notes, right? This is for a uptrend. Oh, drawing with this is so hard. All right, so this is for an uptrend, guys, right? Remember this. So in an uptrend, these are what you want to have. You want to have conjunction of higher highs, higher lows, lows, and highs. Now, for a downtrend, what do we have? All right. We have lower highs lower lows, lows, and highs, right? And this is for a downtrend. Now, what do we have in the ranging market? A ranging trend or a range. What do we have in the range? So actually, we have in anything. We can have higher highs, higher lows, lows, highs, low, 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 everything. So in that, I can't. It's not you. It's nothing to put in your notes. It's literally when you can identify these, that means we are in a range, right? So we have a ranging market range. So I'm going to draw examples for each one to make it. I'm gonna put that on there. We have Chop City, right? That is what a range got. They got Chop City, right? So now let's start identifying them. So over here, when we have an uptrend, we have higher highs and higher lows, and highs, lows, and then we have higher highs, higher lows, right? That is an uptrend. In the downtrend, we have lower highs, lower lows. And then in a ranging market, we have Chop City. All right. So does this make sense so far? Cool. All right. So the rule of thumb is so you have different ways of trading the trend, right? And you can decide whatever one you want to be, whatever type of trader you want to be. You can be a trader that trades with the trend. You could be a trader that trades trend breaks, which I love. I love trend breaks. And you can have trades where what's the other one? That's pretty much it. So you can have stuff like that. So first, let's identify the points that makes uptrend. So first, we have our first higher low, right? This is our first. Actually, let me make a different color so I can kind of see it. I'm gonna make this orange, right? So this is our first higher low. Our second one, why? Because this low is higher than this low. So we have a higher low, right? Then what is this again? Higher low, right? Because this high is higher than that high, right? Same thing here, higher low. And guys, what is this? Just a low. Good job, good job, good job. Just a low. Why? Can anybody tell me? Oh, damn. Can anybody tell me why this isn't a? Can anybody tell me why this isn't a higher low? It didn't go higher, right? What is this? What is this one? No. Come on, what is it? It's another low, right? We can have as many lows. But can anybody tell me why that isn't a lower low then? Why wouldn't we call it a lower low? It didn't go lower, right? It never broke the previous higher low, right? We are in an uptrend. It's still in an uptrend, right? So what did this create though? What did this create? A double bottom, right? So this is where we come to understanding market structure, guys, right? This is where we come to. You want to have double bottoms. If you want to know if it's a double bottom and it's in an uptrend, well, we want to see it not break previous higher lows, and we want to see it hold those lows, right? Normally, what would these lows be at? What would these lows be at? They would be at what? Support. There we go. Good job. Y'all starting to understand it now. So these lows will be at support, right? And what we buy as support, we normally buy as support. Stocks normally bounce off support. That's the floor. And then we still are in the uptrend. What do? What is this? Come on, what is this right here? Oh, we can't. Oh, am I doing it now? My bad. We can't see your mouse only on the drawings. No. Oh, my bad. It's this. Can I see this? My thing. Can I see my cursor moving? This right here. I can't see my cursor. What the hell just happened? Okay, do I circle it? Maybe that's what it is. Can y'all see the circle I just made? Oh wow. Okay, so yeah, I can't see my cursor. I did not know that. Okay, so that is what is that? What I just circled? A higher low, right? Because it is higher than the previous low. It's also delayed. Wow. All right, Zoom getting shorted. Okay, we going short Zoom. Didn't know that. Okay, so then we have another higher low. Now, when you identify the trend, where do we buy calls at, guys? In the uptrend. Right, we buy them at calls. We're going to put equals higher low. Right? Where do we take puts at in the uptrend? A uptrend. A uptrend. You don't, right? We want to trade with the trend. Now, I'm gonna have those traders, those crazy traders that go eventually blow their accounts that actually will buy at a higher high, right? So these are higher highs. So we have, make it a different color, I'll make it green, higher high, that high, this high is higher than that high, this high is higher than that high, higher high. And then what is this right here, guys? The one I just circled. This one right here. The last one I just circled. What is that? A high, right? It is in the high. And what did that create? A double top. There we go. Understand market structure. And what is a double top normally at? Resistance. There we go. So once you understand to identify the trend, guys, you see how quickly you're able to make better trades, if that makes sense, right? Because you understand the trend, you can trade with it. We know that if it doesn't break another higher high, that means if we're in calls, it's time to get out, right? It's time to start taking that profit, because if we can't create another higher high, that don't mean full on puts, you take it to that next low, but overall, like, you want to start getting out, because if we can't create another higher high, the trend is now weakening, and that's when we're going to start reversing, right? And that is at a resistance level. So we have a resistance level, right? So let's go ahead and draw that resistance level. There we go. Now, why won't I take puts here? Why won't I take puts here, guys? Why won't I take puts there? Hasn't broken the trend yet. It's still in the uptrend, right? It hasn't broke. It has to break the previous low, right? So we take puts under here if we want to take the break. That's why a lot of people, when they say it might wick below support, but if it ain't actually broke it, it's still in the uptrend. How many of you guys have actually, seen the stock that was moving up pretty nicely and you took puts on it and then it ended up just kept going higher? I know y'all got caught. Don't try to lie. I know y'all got caught in it. I did too in the beginning. I did. You ain't gotta lie. This you could be honest here. We all here to learn. We can be honest. How many of you guys actually got caught in an uptrend taking puts? There you go. Right? And that happens. It happens, guys. It happens. But what time you start identifying it, right? You start identifying it like, okay, well, I don't really want to take that until it breaks, right? So as you can see, as we just created a double bottom and then we just ran up and we continued that uptrend, right? So this is the whole point. That is why we buy at higher lows and lows, right? That is why we buy at them. And to give y'all a quick little tip, these levels are supposed to be. And if you make your support and resistance levels the right way, they're supposed to be at these swing highs and these swing lows. So this should be a resistance level. I know I drew that. It's supposed, you get what I'm saying. This is supposed to be a resistance level. This is supposed to be a resistance level. And then you start making your levels based off of these, right? And over time, your levels get better, right? And then you start seeing your levels hit, right? So that is how you make your levels. I don't know how many of you guys familiar with pivot points, but it's kind of similar to that. People be like, Jay, do you use pivot points? You know, because your price targets be normally they hit, right? No, I don't got to use pivot points. I understand the trend. I don't need pivot points. I understand the trend. I understand how the trend works, right? I understand if we stop in here, then that's obviously the resistance level now. Identifying the trend helps you identify pretty much anything that you need to know. So now let's go over to the downtrend, right? Now the downtrend, we have what? Remember these, this is your code. So if you have to take these and put these on your desk or whatever, understand a downtrend only has lower highs, lower lows, lows, and highs, right? So here we go. Let's start identifying them. We have a, what is this? Well, this obviously haven't started yet, but overall, we just, for trend purposes, what is this? No. Well, okay, yeah, I'll take that. It's a high because we haven't started the downtrend just yet, right? The only way to have a downtrend is to have a lower low, then a lower high, right? So actually, I like that. I like that because we haven't fully started the downtrend yet. That's our first point, right? So that would actually just be a high. Now, what is this? Great. That was actually good, Quinn. Quinn, if I said your name right, that was actually a good answer. A lower low, right? We have our first lower low, guys. So now, what do we have now? Remember, this was a high. So what is this new one? A lower high, right? So then we just keep going on. Lower low, lower high, lower low, lower high, lower low. And then now we start getting to that what? What is this? Okay, I know it ain't perfect, but just I know it ain't perfect, but it's supposed, y'all know what it's supposed to mean, right? Actually, let's be fair. Let's keep going because that I didn't draw it that way, so we're just gonna do this. So it's a lower high. Now what is this? Okay, now what is it? No, this. All right, let me circle it. I don't know if y'all can see it. This would be just a low. Now I meant to make this come lower. It's all right overall. If you say a lower low, you'll be fine. But I meant to make this the same level, but it didn't. But now when we come here, we have a what? What is this one right here? It's just a high, right? It did not break. It did not. It's at the equal level, right? It's not lower. It's not lower than that level. It's at the same level, right? So there we go. And then here we go. We have our next point. That's just a low. So that's when you start understanding. Now, the reason why I'm doing this, and I know it's getting kind of confusing a little bit in this area. The reason why I'm doing this is to basically let you know that this area is when you kind of want to get out of puts or just kind of wait. Because like I said, it's getting a little harder to identify the trend, and you will have that, right? Because right here, we had a lower high, boom, we made a lower, we had a lower low, lower high, then we came and made a low, then we came and made a high, then we made another low. So as you can, most of the time, these can actually turn into double bottoms, right? So let's draw that. These can turn into double bottoms, but like I said, you don't never know, right? So then if you didn't take the double bottom, if you took the double bottom and you got stopped out by coming lower, that is fine. Cut the trade, move on, right? Because you didn't have no way of knowing, right? So if you have a double bottom below the 9 EMA, I'm gonna get into that. Great question. So overall, if you seen the low, you could have took calls. As you can see, it did not work. Cut the trade, move on. You're not gonna always get it 100% right. Then we continue the trend. We have a lower high, lower low, lower high, lower low, and so on. So that's kind of what I wanted you to get. The question was, so if you have a double bottom that's below the 9 EMA, should we not take calls for the upside? I'm a little confused on that. All right. So number one, remember what I said, guys. Price leads first, right? Price leads first. Price leads first. So if you see a trend and you see a double bottom and it makes sense for a double bottom to be there, but it's still under the 9 EMA, what are we leading with? What are we leading with? What leads? What is king? The double bottom, right? Price. Now, I'm glad that she asked that though, because guess what? Let's say that she feels more comfortable if only to take calls if it was above the 9 EMA. So that what she do is, guess what? Ain't nothing wrong with that. Put down in your trading plan, I only want to take calls if it's above the 9 EMA. That is totally fine. That is totally fine. If that helps you take your trades, and if that gives you that confirmation and that confidence to take that trade, put that into your trading plan and stick to that, right? You don't have to be like everybody else that, oh, we see a double bottom and, I'm going to just take that instead, even though it's below the 9 EMA. Look, if you feel more comfortable only taking a trade if it's above the 9 EMA, do that, right? But stick to it. Don't switch it up, right? If you want to do that, do that. I'm not saying nothing is wrong with that, because there have been times where I would say the same thing. I'd be like, nah, I'm only going to take it if we close above the 9 EMA, right? And that's literally, it's no wrong or right to that. Don't let the indicators, don't let trading confuse you, right? Don't let all that confuse you. You see a double bottom, it's holding that support level. If you want to take it there, take it, regardless if it's below the 9 EMA or whatever. But if it's above the 9 EMA as well, that's probably going to maybe give you more confirmation to take it. How I would have probably handled that is, if I see a double bottom, it's aligning with market structure, it makes sense for a double bottom to be there, but it's below the 9 EMA, I might go in a little lighter. I might not go in too crazy, simply because, maybe my trading plan requires me to only take calls above the 9 EMA. So if I want to jump in without that confirmation, I might just go on a lighter size. You know what I mean? Did that make sense? There's no right. It's not, you're not wrong though. It's however else, how you want to do it. Cool. All right. So next we have Chop City. Chop City, guys. This is what we're in. Chop City. So here, there's no trend. There's no trend at all, right? There's nothing. There's not higher highs, no higher lows, no nothing. It's just a Chop City. So this one is, now there are trading opportunities within Chop City. Me personally, I don't think it's worth it, but there's trading opportunities, but they are supposed to be quick. I'm not about to sit up here and give you guys some false dreams. You can trade in this. I don't recommend it, but you can. But it's a scalping. So that's literally when you know what to really do. If you see price reacting in between levels, right, but no clear direction, if you can't identify higher highs and higher lows, then you shouldn't be, if you're not a scalper, then you should just be like, all right, well, I'm going to work today. I'm actually work on the clock today instead of stealing time. That should be your mindset when you see Chop City, if you're not a scalper. Scalpers, you trade in it, be taking that profit real quick, right? Because you never know when it's going to start reversing, right? Use your levels, quick in and outs. No time for holds, right? Take your 10, 20% and get out of there. But like I said, this is not for everybody. So if you know yourself, if you know you can't cut losses quick, if you know you're not disciplined enough to get in and get out, then you're not a scalper. You shouldn't even have a scalper's mindset. Too many of you guys forcing yourselves to be scalpers, and then you end up blowing your accounts, right? That's the problem. That's not you, right? So don't do it. Why waste it? Wait for the move to come. So now, let's get into pretty much what the different styles. So overall, we learned, trading with the trend, buying at higher highs, higher lows. Now, one of my favorite things to do is trend breaks, right? What I mean by that is I like taking trend breaks. So let's hold on. Oh damn. I hope all y'all got that written down. If you didn't, it's recorded. So I'm pretty sure it was a faster way to do this, but we get it done. All right. So my favorite thing to do is trend breaks. So that means is if I see a uptrend, I'm not gonna lie, this is pretty profitable. I'm gonna admit. My thing is I like trend breaks. So let's say we got an uptrend. what I like to do is, as that uptrend, each time we create a higher low, higher low, I got my alert set for that higher low. So what happens is, as soon as we break that, let me draw it. I like trend breaks a lot. As soon as we decide to break that higher low, you normally have moves like this, start the downtrend. I love higher low breaks, right? So as you can see, we broke it. Normally what we have is a retest, create that first lower high. And then I like taking that retest and I like taking puts there and ride it down. That's what I like doing, right? I love doing this. I love trend breaks. And trend breaks happen like they're quick, like they pay really fast. So because what they try to do is they try to get people that's trapped in calls, so they dump it real fast. Same thing with puts, right? They try to get people trapped in puts and they push it real fast. If you notice, if you trade trend breaks, you notice you can 100% something pretty quickly. So I like that. That's what I like. Also, another way of looking at it is, so this is kind of like the break and retest kind of for bearish setups. But also I like, I'm pretty sure you already know, but I like the trend weakening as well. So let's go here, right? Creating higher highs, higher lows. I like these as well, right? Right. So I like sometimes where if we're creating higher highs and then that next point, if I don't see us, like if we can't break it, then I like taking that as well, right? I like taking that as well. I take entry here, and then my target is this low first. And then if we break below that, then I can hold my runners and get ready to get out. So there's different ways to kind of trade the breaks. I love the breaks because like they pay pretty good. So there's different ways you could do that. Is the trend break your only confirmation to take the trade, or are there others? So you can have other ones. So normally what happens is you will have a death cross right here, potentially. You will have resistance. Hold on, my bad. Let me delete that. I just made that so ugly. You will have, that's where your other confirmations come in at. You will have, well, first of all, let's identify the pattern. You have a double top. That's number one. Second of all, you have a resistance level, right? If it can't break the resistance level, then you have, like I said, you get a death cross. You have volume decreasing. You might have a shooting star. You might have a hanging man candle. There's all types of things that can happen. But the whole purpose is to understand the trend and just how market structure work, right? If we're in an uptrend, we can't create a higher high, then do a shooting star make sense to be right here? Do a bearish engulfing make sense to be right here? Do a shooting star make sense to be right here? Do a death cross make sense to be right here? Do volume decreasing make it sense? Like, y'all get what I'm saying? So you have different, that's how you use indicators and use other things, right? Is when price makes sense. Do it make sense for a double top to be here, right? Do it make sense? Y'all get what I'm saying? If y'all don't, let me know, right? That is the whole purpose of trading. Make it make sense. Keep it simple, right? That's why I say when it comes to the indicators, it's hard to kind of tell right away because we have y'all notice with the MACD, stochastics, 9 EMA, and the 21 golden crosses, y'all know we got a lot of fake outs. Why we have a lot of fake outs? It's simply because a lot of people don't understand the market structure. They don't understand how the market moves. So that's what happens. That we have these, they get faked out by just following indicators, right? Make sure that you can identify it. And what time you will get better at it. So let me go show you guys some examples real quick. All right, start this. So far, everybody with me? If y'all not, let me know. Making sure y'all all on board. Cool. Don't let it overcomplicate you guys, right? Keep it simple. So let me find one for you real quick. A nice little uptrend. All right, well, let's identify first. Let's play a little game real quick. So let me show my screen. Yeah, that's kind of what we're doing. Yeah, counter trend. Yeah. Well, I don't really counter trend. I just wait for the trend breaks. So, all right, we're looking at this, right? Let's just go out. Then I want you guys to count out. I'm about to show you different trends, and I want you guys to tell me what type of trend it is. Damn it. Okay. All right, Thinkorswim wants to play games today. All right, Thinkorswim. Hold on, do I gotta zoom in? Is that what they want me to do? Okay, yeah, that's what it was. All right, so what is this? Chop, right? What is it? But like, yeah, give me that. I want y'all to start speaking the real trading terminology. This is a range, right? Real quick, a question was let's see what this question was. Somebody just asked me a question. So trend breaks aren't considered breakout trading. No, not really. Breakout trading is a little different. I guess you can kind of say, nah, I won't consider. I mean, I guess it depends on how you trade it because I wouldn't call it breakout trading. No, you just taking rejections and just taking the break of trend. Structure getting weak, right, or structure getting stronger. Okay, so we understand what this is, right? Now, can anybody tell me? Hold on, somebody drew on the screen. Clear. Okay, so let's go here. All right, let me delete this. All right. So now, can anybody tell me what this is? Oh, wait, damn. I didn't add it all the way in. Damn. Thinkers, stop acting like that. Right? So we have a little uptrend. Right? This little area right here was an uptrend. So as you can see, and don't just say that because just because it's going up now. Don't make it that obvious. But overall, we had a higher high, higher low, higher high, higher low. Like I said, it's going to be uglier on the charts, but oh well. Higher high and higher low, higher high, higher low. You can kind of depends on where you want to plot it from. But overall, it kind of just got ugly after that, could not break, and then could not create a nice higher. I mean, it just came all over the place, basically. So as you can see how the trend started acting different, right? But overall, we had a nice little uptrend going, and that was pretty much that rally that we seen the last couple of days, right? Pretty strong uptrend. Let me get you guys a better one, though. Let's delete this real quick. Let's get you guys a better one. All right, the video had a nice one. But over time, you get better at it. Video. That was the 15-minute, I believe. Yeah, right here. So here you go. All right. So we have our first low. This is our higher high area. Lower low. Higher low. And then as you can see, we couldn't make a high, right? We just held that level. So that means, I ain't gonna lie, if you would have took puts, you would have got stopped out, but then these are where your indicators kind of saved you at. So as you can see, we tried to make another higher high. We cannot make another higher high. We failed. But at the same time, that's why it's best to just take puts once it breaks those previous higher lows, because I'd rather take the puts at the break of the previous higher lows because you have stuff like this. where we kind of like, it kind of create like a level of chop, if we're being honest, right? That's why I rather just wait. Like this is literally what I do. I literally set a level, right? I probably not even probably just a level, a line right here, right at that higher low. And then I will take puts under there instead of trying to take it from the top. Only because, like I said, you kind of get a little levels of chop. Yeah, y'all see what I'm saying now? Like I don't want nobody confused, but you see how this kind of just like chops you out a little bit. So I wouldn't necessarily try to take puts, and we were holding above that 21 EMA, so that's where the indicator started saving you at. So I just rather take puts under those higher lows. And you kind of consider that breakout trading, because as soon as we break that low, I ain't gonna lie, you couldn't take a put because it's gonna break pretty hard. Not gonna lie, like if I were to have, so for example, we had I'm about to draw it real quick just so I can kind of get what I mean. So if we had that, boom, I would have had my level right here to take puts. And then we probably would have had, not gonna lie, the market kind of choppy, so it's not gonna give you a perfect trend right off the rip, right? So you might have had like some little chop, not knowing what you want to do, stuff like this. And then it finally decides to break that. So that is where breakout trading can come from my breakout traders. That's like, this is like really profitable. Like, I mean, literally, if you really disciplined enough, you can literally sit there and just wait. And once it break it, it's gonna break it hard, right? So as you can see, right there, I do this a lot. Like I do this a lot. As you can see, we took that break and then it just shot down. And then before the pullback, because normally what happens is you're gonna have this type of move. It's gonna come retest that, and then it's gonna start a downtrend, right? Now, I will have that question where, what if you took the double top? What if you took the double top at that higher low? Like I said, price action is price action. You definitely would have got stopped out. Maybe you probably would have got lucky and made a little profit, but overall, you most likely would have ended up taking those puts, and you might have been good, but overall, it held that 9 EMA, and then we bounced. So, like I said, for me personally, I rather just take it below that higher low in the uptrend, or if we have like a more clear double top. But overall, like if we're that strong right off like a move like this and we're holding those levels, this is where your confirmation come in, guys, because as you can see, we created that double top, but we didn't actually get, like, if we start using our indicators, that's why I say there, don't single out the indicators. Look how they helped a little bit, right? Let's look at our indicators for a minute. So as you can see, as we was breaking up, you thinking like, okay, well, that's a double top. So you get ready to take that double top, right? Thinking it was going to break down. The whole time, the 9 EMA never showed no weakness. It never started curling down, right? It didn't do nothing. The stochastics actually golden crossed up to this level. So it didn't really, what I'm saying, how the indicators kind of never really show nothing bearish. So the indicators kind of helped, right? And for my person that was like, well, Jay, should I only take calls above the 9 EMA or below? And that way, look, if they were to say in my trading plan, I'm only going to take calls above the 9 EMA and only take puts below, that trading plan would have saved her. It would have saved her this day, right? She would not have fell for this, because guess what? Her trading plan says, if it's holding the 9 EMA above, I don't want to take puts, right? Double tops work best in downtrends. I'd rather take those in downtrends. Those are the best ones to take. Then that's where it really comes down to your strategy. Like, you could take double tops in uptrends, but that's why I say I'd rather take them in a downtrend. They're a lot easier in the downtrend, guys. I guess I gotta show y'all one more time. Hold on. Let me see. Because I think I just confused somebody on the trend. It's all good. Okay, so the question is, so when do you take double tops? So normally, me personally, I'd rather take double tops in the downtrend. Let's go over here and draw real quick. The reason why is so you don't get those fake outs, right? Double tops is a bearish pattern. So why not? I really only want to take them in the downtrend, right? So as you can see, we came here, made that lower low, and then we made that lower, we just made that high, and then it made sense. Y'all get what I'm saying? It made sense, right? So right here is where I would have took that double top, right? Because look, it made sense. It's in the downtrend. It's a bearish pattern, so why not take it there? Now, there are times where I will take it in an uptrend, and I would just face the consequences of it. But most of the time, if you want high quality setups, I will never consider A plus setup a double top in uptrend. You know what I mean? Like, it don't make sense, right? If it's a bearish pattern, right? So take the bearish pattern in a bearish trend. You know what I'm saying? Did that make sense? So I would have took it in a downtrend, right? And if we broke above, hey, cut your losses. I guess it's about determining when it's going to trend break or when it's going to double top or double bottom. Yeah, so it pretty much paying attention to those swing highs and swing lows. And like I said, you will never fully know. That's why you looking for the most confirmation that you have, because you never really know what if it's actually going to be a double top or a double bottom. Like, there's been plenty of times where we didn't have something like this. There's been plenty of times I didn't actually did this where, oh man, this didn't happen to me so many times. So we have a uptrend. Right. So we have an uptrend creating, higher highs, higher lows, higher highs, higher lows, higher highs, create another low. And guess what I do? Like, all right, bet. All right, we have support. I swear this didn't happen to me so many times, right? We have support. Let me make this a different color so y'all kind of see what I mean by support. Just make it orange, right? I'll be like, all right, bet. I'm taking calls here. We can't break that previous higher low. Most likely we creating a double bottom. I think it's going to go ahead and do that double bottom. And then we do this. Actually, it's been times where we didn't did this, break below that swing low, and then break back up and double bottom, right? There's been plenty of times, right? There's been plenty of times that didn't happen, right? I mean, like I said, you never know, right? That's why you go in with the right size. We're playing a probability game. But I will tell you this for the people who say don't be discouraged. Trading with the trend, trading right, using the right market structure, trading this way, you're going to win more than you lose, right? You will have moves like this. It happens. What I'll do is, all right, we got remember what we call it the liquidity grab. They go ahead and trigger stop losses just to send it back up. Normally when that happens, I cut my losses, and as we reclaim that higher low, that's normally a level. I will plot that level. And if we break above that, then I will go ahead and take the trade again, right? So I will get back in. So like I said, you have to really understand, like, it happens, right? You can't be afraid to take a loss. Yeah, they could use a bigger time frame. Selling on that lower low or holding through that pullback, left example. So you're saying like hold through it? So now the goal is you don't want to hold through the swings, right? You don't want to hold through because in this market, you definitely don't. The IV is so high because let's say that you took puts here. This actually happened to me on Amazon, right? I took puts at the first lower high. Amazon did all this. It did. I was only up like 5% once it got all the way down to here, right? Because the premiums just got crushed, right? Amazon literally had dropped like $30, and I legit, literally legit. Actually, I think I ended up losing on this trade because the field prices on TOS killed me as well. So overall, like, that's why I say, as you take it at the lower high, start taking that profit because that's normally a level. Just take it and just move by, and just it's better to reload than hold in this market, right? It's better to take your profits and then just get back in rather than just holding through it. Back then, you could just hold through this and be up 1,000%. Now, nah, we ain't in that type of market no more. These pullbacks hurt. Why are there such premium burns? So right now the market is in a bearish market. A lot of the IVs on a lot of these stocks that we trade are pretty higher. They're pricing the contracts more than what they're actually worth. So if the stock price doesn't go our way the right way, the demand of the contracts are starting to lose value, which is causing us, even if the stock price is going our way, it's causing us to still lose money, right? And that is the point where I was telling you guys, people they thought I was crazy when I kept saying, you can make money not only the stock price going your way, but because of the demand. This is what I'm talking about. This is what I'm talking about, because a lot of people don't understand this. When you're trading options, A lot of people don't understand the trend, guys. So if a stock is reversing, they're selling, which is making that demand go away. And it don't help that the contracts are already priced more than what they're supposed to be. So it really just starting to burn you even more. That's why these pullbacks, on Tesla, you will be up 100% here, and then on that pullback, you're only up 20%, 16%. And it didn't even come back to where you took puts from, right? So that's why it's just better to just take profits and reload. And that's something that I need to work on myself, because like I said, I'm adapting to this new market too, as well, as far as that part. If I adapted my strategy at the beginning of the year to be able to trade, in the volatility, now I got to adapt my strategy to trade in this damn premium burns, right? And that's something I just got to work on. And I acknowledged it. How did I know that it was affecting my trading? Because I document, I'm journaling my trades, right? I'm literally journaling my trades. So I'm seeing what's going on. It's not necessarily me being wrong, actually, in this market. It's me trying to hold and catch my entire move when through these pullbacks, and it's just making, and in the end, now sometimes they pull back too hard to where now you lose money. So that's something that I'm learning in this market. Like I said, we all have to figure out, what works, what don't, and just take it from there. So that's actually currently what I'm going through is, okay, well, now I can catch my whole move. So now I got to see what type of setups I want to take on a day-to-day basis. Nothing is wrong with the strategy. It's just the way I use my trade, the way I do it, like I said, I'm not used to taking profits at just because it's profit. I'm not used to taking that. So now that the market we in is forcing me to do that, we're not getting along right now at all. We're not getting along right now. Actually, this just happened to me. I was up $4,000 on XPX, and we still had so much room to go down. Man, we reversed, chopped up, then finally did like a little pullback, and then I ended up losing $5,000. So, but the stock was still lower than what I got in at, but it started doing like all that choppy stuff, and it happens. So that's affecting me trading wise because I'm not used to that. I don't like doing that. I'm the type of person that holds to my targets, but unfortunately, we just don't have that. Now, a quick fix for my people that's like, well, Jay, how do I fix that? Here we go. We got setting stop losses. I will teach you guys, if you don't know how to do it on your computer, I will teach you guys how to use stop losses or whatever. There's tons of videos as well. I only can teach you on TOS. I can't teach you on nothing else. So go on the internet. But there are literally tons of videos of stop losses, setting your stop losses in profit. So let's say that you bought Apple at $100 per contract. Apple goes to 150. Go ahead and set that stop loss at like 130, 140, whatever you want to do. So if price comes back to that target, it'll just stop you out, so you won't take a loss. That is highly recommended in this market, right? That is highly recommended. The trades that I don't set a stop loss for, those are the ones that I lose on. Those are the ones that I lose on. The ones that I don't set stops. Also, get in the habit of setting your stop losses at break even, right? Get in the habit of that. You buy Apple at $100, Apple goes to $110, set your stop loss for $100, right? Set it for $100. That means you want to be stopped out at what you bought it for. So you don't, I ain't gonna lie, you still probably gonna take a little loss, but it's gonna be small because I'm not guaranteed that it's gonna stop you out exactly at what you bought it for. It might stop you out, like if you bought it at $100, it might stop you out at $98, $97 or something like that, but it ain't gonna be no 50. If it's 50, then you better call them folks. They owe you some money. But other than that, like that's pretty much like as far as like use stop losses. Please, 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 please. You start using stop losses, guys. They help. And I'm not gonna lie, they actually kind of beneficial. Now, for the people that's gonna be like, well, Jay, like, they be stop loss hunting. What if I get stopped out? Well, number one, don't set it for obvious levels. So like $100, $150, 110, start setting it at those like weird levels. Maybe, I mean, not those weird prices. So like maybe like 107, like don't set it at those whole numbers. That helps a little bit. Not really, but it helps. I ain't gonna lie. This happened to me one time. I was so pissed. I set my stop loss on the video for, I think, 220. Bruh, when I say, I'm telling you, I witnessed it because if you trade with TOS desktop, when you set your stop loss, it will pop up on the charts. Like you can physically see your stop loss on the charts. So I'm telling y'all, I'm kid you not. I see the stock dropping to my stop loss. And I'm just sitting there like, I know they're not about to come touch it. I know they're not about to come touch it. Y'all, it touched it. And I mean, as soon as it touched it, it reversed. I mean, it was like they literally said, that is Jay's order. Stop him out and send it as soon as you do it. I mean, it was like me and Isaac was on live. We was actually live trading together. And it was the funniest thing ever because Isaac had set his for $1 lower than mine because I put mine at an obvious level at 220. He put his at like 218, 219. Yeah, bro, that thing came straight to 220, stopped me out, and then ran to like 400. And Isaac actually won on that trade. So don't set it at obvious levels because they really be playing ball. And I was so mad. I mean, it was like a magnet. I mean, on the same candle. Can they see? They can see anything. Whatever you do, they can see all of it. No matter what you do. I'm not saying like, I wouldn't even in heavy. Don't put it out there to be like, oh, well, they gonna always see my orders. No, like overall, they just gonna put it where generally most people put their stop losses at. That's kind of how it works. Like most people going to put their stop losses at those obvious levels, 220, 230. Nobody finna go, oh, I'm gonna set my stop loss for 232, right? They don't really, that's not a general thing. Right, so they gonna come to where majority of them. Right? Every time where they gonna hit everything. What's the benefit of stopping people out? It's a competition. When we lose money, they make money. When we make money, they lose money. Understand, trading is a competition. Whenever you lose money, somebody else made money. That's how the game works. So they gonna try any tricks and books to get us, to make us lose. That's how they make money. Y'all gotta understand that. And you gotta understand. And that's why I be telling people, stop trying to beat hedge funds. You're not about to beat no hedge fund, man. Your little $1,000 account ain't nothing compared to their multi-billion-dollar account. Like you don't, like they can suffer a pullback, right? You probably can't, right? So you gotta understand, our goal as traders is to be on the same page with them, not beat them, right? If they come to stop somebody out, we want to be with them when they stop the other people out. That's what we want to be. Our goal as a trader is to identify what they're doing and relay that and find out what they're doing based off of the charts and follow them. We want to follow the money. Ain't that why all y'all in this Discord? Y'all see me making money. Y'all see the team making money. Y'all came to Discord. Why? Y'all want to follow the money. So treat stocks the same way. You want to follow the money. Somebody said, nah, they got names on the orders. I wouldn't be surprised if they seen that Tesla. They seen that. They had to. They seen that. They like, oh yeah, that's Jay. Oh yeah, we finally got him. We didn't finally got him. Finally. I'm not even mad no more. I was mad, but like, come on, y'all. I didn't make so much money off of Tesla. I knew it was coming one day. I knew it. Not this early. I ain't gonna lie. I thought it would be, when I'm like 25 or whatever. I knew it was coming. It's all good though. My P&L on Tesla is still over 6 figures, so it ain't nothing crazy. On the money team, indoor pool, outdoor pool, indoor basketball. I don't know what that means. No. But yeah, I thought it was gonna be like 25 when I'm like a multi-millionaire, and then they're gonna try to come back and like, oh, we let them run it up for too long. Man, they came early. But if y'all don't know what's crazy, I'm not even that mad because that account, it went from 7K to 133,000 and I withdrew 40K out of it. So I mean, technically I ended profitable. If we being honest, I didn't keep all the money, but I did. And it was and I'm not gonna lie, it was on accident. I ain't gonna lie to you guys. It definitely was. I could have stopped it. Let's put it that way. I could have stopped me from putting that much in that trade, right? I could have stopped it. When I seen it happen, I think I had like 4 to 5 minutes before, like I could have actually sold that position. But I was like, you know what? I'm confident. And it happened, right? A swing trade, it happens. It happens, guys. Losses happen. But that's pretty much for the class. Any questions about the trend? We're going to get more into the trend once we put everything together. So how the classes work is you learn from each class, And then closer towards the end with the whole entire mentorship, we're going to put everything together, right? And then you guys have your own trading plans, how you want to do it. Trading isn't hard though, right? You just understanding the basics. Tomorrow we'll be going over supply and demand. Make sure that all of you guys are there. I don't care if you got work, you got a party or whatever. You need to be at class tomorrow. We're going over supply and demand. So please make sure that all you guys are there. Tomorrow is a very important class. You guys need to know supply and demand, especially in this market. To the phone call thing, I'm gonna figure something out. I can probably work something out like that. I'll let y'all know for sure. But any questions regarding this? Okay, yeah. Just DM me. I'm gonna look today. Any questions? Y'all don't got any questions? Let me start the recording because I know y'all.